Right. So I hope you've seen the videos so far regarding the first four amendments that we have discussed over there regarding the auditing standards, that is SA 450, SA 800, 805, and the 810. Right. I would also recommend that you go through the question bank, go through the MCQ related to those particular standards, mainly in the 800 series, because certainly there is a higher possibility of the questions coming in the exam from those particular standards. Okay. Right. And now proceeding to the further amendments over there, which is regarding the audit of the banks. Okay. Right. So when you strategize your preparation for CA final audit, right, you have it in your mind कि हाँ ethics तो पढ़ना है, right, then ethics पढ़ना है, उसके बाद standards तो पढ़ना ही पड़ेगा, right, फिर standards के बाद अब और कौन से chapter किए जाए, तो one of the chapter which comes in that list is bank audit. है ना कि हर एक एग्जाम में बैंक ऑडिट का क्वेश्चन आता है, प्लस इंटर ऑडिट में भी बैंक ऑडिट था, प्लस आर्टिकलशिप में भी कहीं आपने बैंक ऑडिट किए होंगे, राइट, सो दैट्स व्हाई इट कुड बी अ मोर रिलेटेबल चैप्टर ओवर देयर, right, and certainly goes without saying that almost 99% of the time in the exam we see a question, at least one question coming from the bank audit chapter in the theory part of the paper, and also there could be some questions in the MCQ part of the paper. Okay, right, so now talking about the amendments, right, so as you've come to the amendment part and looking into the bank audit chapter, you can have a look at the entire content of the bank audit chapter also over there. You look at the beginning of the chapter, you see the special features of the bank and the audit considerations in the audit of bank. And then after that, you have the principal enactments governing the bank audit, then the form and content of the financial statements, the appointment of the bank auditor, the reporting, right? What are the reports and certificates? Then the LFAR, the long form of the audit report, then the approach, the steps involved in conducting the bank audit, right, from the initial considerations up to the reporting, the stress testing, the Basel III framework, and so. And then if you come towards the end of the chapter, you see something over there called as the concurrent audit. At concurrent audit, we have the initial discussion over there regarding, what is concurrent audit. It says it's not a pre-audit, but there is a less time gap between the recording of the transaction and the verification of the transaction. And then the appointment and the scope of the concurrent auditor who determines. Then after that, the areas to be covered in the concurrent audit, like cash, investments, deposits, advances, housekeeping, foreign exchange, and the other items. Right, then after that, we have the reporting by the concurrent auditor, that minor irregularities, major serious irregularities, fraudulent transactions, to whom are they required to be reported. Right, so that's the discussion regarding the concurrent audit, right? So that's the beginning and the end of the chapter. Right, then after that, if we come in between, you see some discussion over there regarding the IT environment, because now obviously the banks operate in the IT environment. So what information the bank should provide to the auditor regarding the IT environment? That is one question. And another question is regarding the KSCA, that is the key security control aspects in case of a computerized bank. That is what controls the auditor needs to check in case of a bank. This question is awaited to be asked in the exams. Okay, right. Then after that, there is a discussion regarding the internal controls of the bank. In general, what should be the internal control for cash, for advances, for bills sent to the bank for collection, and for the demand draft, credit card operation, super favorite question of the ICAI, internal control for credit card operation. So that's again the internal control discussion over there. And then after that, we come to the main part of the discussion in the bank audit chapter, wherein we have the verification of the advances, that is the assets and assets of the bank, then verification of the capital and liabilities, in which you have the verification of the deposits of the bank and the verification of the contingent liabilities of the bank. Right, so verification of advances, verification of deposits, verification of contingent liabilities. Right, so what is the disclosure of the contingent liabilities? What are the audit procedures for these contingent liability, general audit procedures, and also the specific audit procedures? Right, then deposits, we again have CASA, and a verification of current account and savings account, then verification of the fixed deposits, verification of the recurring deposits, verification of the NRE, NRO, that is the non-resident external and the non-resident ordinary accounts. And then we have some general points over there where there could be a possibility of window dressing, inflation of the deposit, also inflation of the advances, which could lead to a qualification in the audit report. Okay, right. Then now we come to verification of the advances. Right, so advances, again, we have the internal control, again, repeat discussion over there. Then substantive audit procedures, recoverability of the advances. And then we have a lot of RBI prudential norms discussed over there. Like, accounts with temporary deficiency, limits not reviewed. Then also where they talk about the government guaranteed advances, right? Then agricultural advances, right? So that's all the consortium loan, the sale purchase of NPA, right? So that's the RBI prudential norms, okay? Right, and then there is inter-office adjustment and then fixed assets and so much of the content in the bank audit chapter also. And one of the additional content which is also there in the bank audit chapter is regarding the CRR and the SLR requirement. Right, so we don't have to study in this bank audit chapter, okay, what is CRR, what is SLR. What we have to study in this particular chapter over there, that as an auditor, how you do the audit. है ना, कि आप ऑडिट कैसे करोगे, क्या whether the bank has complied with the cash reserve ratio requirement and whether the bank has complied with the statutory liquidity ratio requirement. And that is where the amendment has come. Right, so just by the disguise of the amendment, we happen to take a snapshot of the entire bank audit chapter. And now we come to the discussion regarding the audit of the compliance with the CRR and the SLR requirement. Okay, once upon a time, they asked a question in the exam, okay, what are the audit procedures to be performed to check compliance with SLR requirement? And so in the theory part, but what has been seen more in the exams, if I look at the trend of the past exams, is that, for the maintenance of the SLR, the bank needs to do the computation of something called as the DTL, the demand and time liabilities. And because based on kitna liability hai bank pay, accordingly they have to maintain the reserve ratio. They have to maintain the liquidity ratio accordingly. Right. So computation of that DTL, the demand and time liabilities, what is to be included and what is to be excluded. That is one of the favorite area where they are asking the MCQ in the exam. And okay, the demand and time liabilities before giving adjustment to the following of the is so much of the bank. And then what should be the amount of the DTL. So basically you need to know in that particular list, okay, what is to be included, what is to be excluded. Right? And once you know that, accordingly you do the plus minus and you get the answer. And so that's just an overview. Then again we will discuss in detail the audit procedures. Because the CRR, SLR is required to be maintained for the bank as a whole. And that is the SCA. The statutory central auditor has to check it for the bank as a whole. But obviously for the branch, it would be checked by the branch auditors. And then this branch auditors, they report to the head office auditor, the main auditor of the bank. And so the consolidation has to be done at the HO level and so. And then they say that auditor, you need to check the compliance with the CRR, SLR requirement on 12 odd dates in a year, not being Fridays. Fridays. Okay, and then they asked, they made a MCQ in the exam that every month, for 12, April to March, 12 months in a year, the auditor did the checking for the SLR requirement. In the month of April, he did it on Thursday. In the month of May, he checked it on Friday. In the month of June, he checked it on Tuesday. In the month of July, he checked it on Thursday. So which of the months he is not followed with the requirement? It's so only the 3 words over there, if you studied it, okay, not being Friday. Oh, that May and July, this fellow has not followed the requirement because he's checked it on Friday. Being Fridays. And why not Fridays? Friday is the day on which the branch auditor reports to the head office. So that is why it says statutory central auditor, you need to check it on a date other than Friday. Right? So that is not being Fridays. Okay, right. So with that, let us look into the amendment over here, right? So it says compliance with the CRR, SLR requirement, the cash reserve ratio and the statutory liquidity ratio. As I've told you, these notes are available on the Telegram channel of us, and also whatever is the amendment part is put in the red and bold over here. Okay, and so SLR requirement. And then after having a brief introduction of CRR, SLR, then you have the audit procedures. Right? In the audit procedures, again, there has been an addition mention a few of the points, and very important what I told you over there. Okay, what is to be included in the liabilities? And what is to be included in the liabilities, and also examine that what has to be excluded from the liabilities. Did you notice that? Excluded, included from the liabilities, and also excluded from the liabilities. And then they've also added a third list now over there, which is also the exempted categories, right, of the following items. Okay, right. So with that, let us just go through entire discussion regarding the CRR and the SLR requirement in the bank audit chapter. Okay, so just take it as a reason. And that, oh, I happened to do the amendment in the bank audit chapter, which was regarding CRR, SLR, and in that process, I studied the entire bank audit chapter also. That would be so wonderful and so deterministic of you. Okay, right. So now cash reserve ratio. What does it say? It is the minimum fraction of the total deposits of a customer, which commercial banks have to hold in as reserves, either in cash or as deposits with the central bank. Which is the central bank? It is the RBI. Right? So either a certain percentage of the total deposit keep with themselves or keep it with the central bank. Right. One of the important determinants of the cash balance to be maintained by banking companies and other scheduled banks is the requirement for maintenance of certain minimum cash reserve. Right. So that's the cash reserve ratio. While the requirement for maintenance of cash reserve by banking companies contained in the Banking Regulation Act, the corresponding requirement for the scheduled bank is contained by the RBI Act. It says for banking company, the Banking Regulation Act, and for the scheduled banks, it is given by the RBI Act. Okay, right. The RBI from time to time reviews the evolving liquidity position and accordingly decides the rate of CRR required to be maintained by the scheduled commercial banks. Right. So what is the rate which is required to be maintained? Therefore, the auditor needs to refer to the master circular issued from time to time in this regard to ensure the compliance of the CRR requirement. Okay, right. So it says it is the minimum fraction of the total of the deposits which the bank needs to keep either with itself in cash or keep it as a deposit with the central bank. Right, so that's the cash reserve ratio. Now coming to the second one, that is the SLR, the statutory liquidity ratio requirement. It is the requirement that every scheduled commercial bank in India, right, so every which is there in the list of the scheduled banks released by RBI, is required to maintain in the form of certain liquid assets. So this had to be kept in the form of cash or deposits. Now this needs to be kept in the form of certain liquid assets. And what could be those liquid assets? It could be gold, cash, government approved securities before providing credit to the customers. Right? So it's like if you earn 1 lakh rupees in a month, you cannot spend that entire 1 lakh rupee. First, you need to keep aside certain amount in your savings. Rather, they say, the saving should be your biggest expenditure. Right? So say 23%. So 1 lakh, you earn 23,000, you do the savings, and then after that remaining money, you spend it over there. Right, so what does it say? Certain liquid assets in the form of gold, cash, or the government approved securities before giving the credit to the customers. Okay. RBI requires the SCA. Who is SCA? The statutory central auditors to verify the compliance with the SLR requirement on the 12 odd dates in different months of a fiscal year, not being Fridays. Right, so 12 odd dates, so randomly any day of the month, but it should not be the Friday. Right, not being the Fridays. Okay. And the objective of maintaining SLR is to have an amount in the form of liquid assets, which can be used by the bank to handle the sudden increase in the demand for the amount from the depositors. That all of a sudden, customers kept the deposit with the bank. And now whatever deposits you have with the bank, it started giving the credit to its customers. Okay, but now what all of a sudden if the customers start asking for the repayment of the deposits, they start encashing the money. Right? So sudden increase in the demand for the amount from the depositors. Right? So the resultant report is to be sent to the top management of the bank and also to be sent to the Reserve Bank. Right? So this resultant report regarding the SLR requirement, it is to be sent to the top management, like to the audit committee, board of directors of the bank, and also to be sent to the boss, that is the Reserve Bank. Okay, right. Now coming to the audit approach. So what is the responsibility of the auditor? Basically, the responsibility of the auditor is divided into two parts. One, the computation of the DTL, right? That how the calculation of the demand and time liabilities has been done. And say the computation of DTL comes to 1,000 crore, example. And say SLR requirement is 23%. So now 230 crore has to be maintained in the form of the liquid assets, gold, cash, and the other government approved securities. So it talks about the maintenance of the liquid assets. Right, so two parts. One, the computation of the DTL. Auditor, you need to check whether the computation of DTL hasn't been done properly. And second, accordingly, whether the liquid assets have been maintained by the bank. Right, do you follow this? Computation of DTL and maintenance of the liquid assets. These are the two audit procedures which the auditor needs to perform, mainly when he has to do the audit of the SLR requirement. Okay, right. So now coming to the suggested audit procedure. Let's number one, starting point, understand. Always take a blank piece of paper and try to understand that what is the RBI circular, what is the RBI instructions regarding the composition of the items of the DTL. Right, so number one, what does it say? Understand. After you understand, now you request the branch auditor, because you are the SCA, the statutory central auditor, but branch auditor would be doing the working at the branch level. Right, so branch auditors to send their weekly trial balance as on Friday. And that is why we said that central statutory auditor, he does not check it on Friday, not being Friday. Right, and these are consolidated level. Right, so weekly trial balance to be sent by the branch auditors to the central auditors on the Friday. That is procedure number two. Right, now based on this consolidation, right, so now you receive the information from the branch auditors also. The DTL position is determined for every reporting Friday. Right, so the position is determined for every reporting Friday, and the SCA should request the branch auditor to verify the correctness of the trial balance. So when they are submitting this weekly trial balance, obviously the branch auditors, do they need to check the correctness of the trial balance? Yes. Right, they need to check the correctness of the trial balance. Okay. Right, so probably some, what you say, power fluctuation. Right, so I'll not pause the recording, let the recording go on. But yeah, once the power comes back, probably yes, the camera should also be on. Okay. So I think I can, without I being on the screen also, we can continue to have the discussion. Right, so it says the weekly trial balance is to be sent by the branch auditors. And again, branch auditors, before you send that data, you need to check the correctness of the trial balance, right, relevant to the date selected by him or her. And the branch auditor should specifically be requested to examine the cash balance of the branch on the selected dates, right? So yes, one, the branch auditor has to check the correctness of the trial balance, and second, also examine the cash balance. And also examine the cash balance. Okay, right. Then examine on a test basis, right? So now the SCA, the statutory central auditor, the consolidation regarding the DTL position prepared by the bank. Right, so because obviously you would have prepared the entire computation consolidation of DTL, the bank. Right, so auditor, you need to examine on a sample basis. Right, the consolidation regarding the DTL position prepared by the bank with reference to the related returns received from the branches. Right, so with reference to the related returns which have been received from the branches. Okay. Right, so let me see if the power is back. Oh yeah, absolutely. Right, it's back. Yeah. Okay, right. So auditor should also examine whether the valuation of securities done by the bank is it in accordance with the guidelines prescribed by the bank or by the RBI. Okay, that's also the Reserve Bank. Okay, right. So one, we request the branch auditor. Then branch auditor, you have to check the correctness of the trial balance and also examine the cash balance. Okay, right. Then central auditor, statutory central auditor, you have to check on a test basis the consolidation regarding the DTL position, and you also need to examine the valuation of the securities done by the bank, because you know the cash, the DTL, the liquid assets could be in the form of gold, cash, or the government approved securities. So that is why also the valuation of the securities, whether it has been done as per the guidelines prescribed by the RBI. Okay, right. So these are the first 4 points which we have for our discussion over there. And then after these 4 points, it says now the next point. Okay, now auditor, when you're checking the computation of the DTL, ensure that these specifically examine that these items have been excluded from the liabilities as per the RBI guideline, and some of these items are. And similarly, specifically examine that the items which have been included in the liabilities as per the RBI guidelines, and some of these items are. And then while examining the computation of DTL, the auditor may specifically examine the details of the exempted categories of the following items. Right, so you have the excluded from liability, included in liability, and the exempted categories. Okay, right. So now what we need to see over here, okay, in the computation of the liabilities of the bank, demand and time liabilities of the bank, what is not to be included, what is to be excluded from the liability, right? And how many points do we have over there of what needs to be excluded from the liability? Okay, let us just try to make a list of how many points we have over there. 14 points over there. What does it say? कि ये बैंक का liability नहीं है, इसका आपको SLR मेंटेन करने की जरूरत नहीं है. What does it say? Paid up capital, reserve, any credit balance in the profit and loss account of the bank, amount of any loan taken from the RBI, because that is your central bank, and amount of refinance taken from the Exim Bank, NHB, NABARD, and the SIDBI. What does it say? This is not your liability. This is not to be considered while doing the computation of the DTL. What does it say? Paid up capital, reserve. Then you can't read only the first few words over there. एग्जाम में जब क्वेश्चन आता है तो इधर से आता है. Amount of any loan taken from the RBI, is it to be included or excluded? It is to be excluded. Then any amount of refinance taken from Exim Bank, NHB, NABARD, SIDBI, is it to be included or excluded? Tell me. It is to be excluded. Right? It is to be excluded. Okay. Then bills discounted by eligible financial institution as approved by the RBI. Right, so any bill discounting done with the eligible institutions approved by RBI excluded. Net income tax provision. So again, it says that does not come in your demand and time liability. Amount received from DICGC, ECGC. What does it say? Again, excluded. It is not to be included in the computation of DTL. Amount received from insurance company for an ad hoc settlement of claims pending judgment of the court. Again, it says it is to be excluded. And then amount received from the court receiver. Right, so all amount received from DICGC, ECGC, insurance company, court receiver, excluded from the liability, excluded from DTL. Then net unrealized gain or loss arising from derivative transactions under trading portfolio. Right, so again, it is the gain or loss, net unrealized. It is to be excluded. Income flow received such as annual fee and other charges which are non-refundable. Again, what does it say? Excluded. It is not the liability. Liabilities arising on account of utilization of limit under the banker's acceptance facility. Again, it says it is not to be included in the computation of DTL. It is to be excluded. It is to be excluded. Then part amount of recovery from the borrower. So this is also incoming, right? Recovery from the borrower. So again, it says it is to be excluded. Amount received in Indian currency against import bill and held in sundry deposits pending receipt of the final rate. Again, it says excluded. Unadjusted deposits, balances lying in the link branches for agency business like dividend warrants, interest warrant, refund of application money, etc. in respect of shares debentures to the extent the payments made by other branches but not adjusted by the link branches. And so deposits lying in the link branches, again, not to be included in the liability. Margins held and kept in sundry deposits for funded facility. So again, it's a margin, so it's not to be included in the liability. Right, so I think little bit of common sense and little bit of memory going together, you can remember what is not to be included in the computation of DTL. And a paid up capital, and a reserves, any credit balance, loan from the RBI, loan from the refinance taken from the Exim, NABARD, and is the NHB, SIDBI, and so. Like then bills discounting done. Then after that, net income tax provision, net unrealized gain or loss. I can club it together. Right, then amount received from DICGC, ECGC, insurance company, court receiver, excluded. Then income flow received in advance, liabilities on account of utilization of the limit under the BAF. And then part amount of recovery, amount received in Indian currency against import bill, unadjusted deposits balances, margins held and kept in sundry deposits. Right, so this is to be excluded from the liability. Right, now coming to the next one, okay, what is to be included in the liability? कि जब आप वो DTL का कैलकुलेशन करोगे तो उसमें ये सारा include करना है. क्या include करना है? Net credit balance in the branch adjustment account. Right, so net credit balance. So again, it says that is your liability. Credit entries in the branch adjustment account which are outstanding for more than 5 years are required to be considered at gross. So less than 5 years are to be considered at net, but more than 5 years are to be considered at gross. Then interest accrued on a deposit should be calculated on each reporting fortnight as per the interest calculation applicable to various types of account, whether or not such interest is accounted for in the books of account, so that the bank's liability in this regard is fairly reflected in the total net demand and time liabilities of the same fortnightly return. Cash collaterals received under collateralized derivative transactions, as these are in the nature of the outside liability. Right, here what did they say? Net unrealized gain or loss from derivative transaction excluded. But here what does it say? The cash collaterals, that is to be included. And so net credit balance in branch adjustment account included. Then the interest payable on the deposits on fortnightly basis, whether or not accounted for in the books of account, to be included. Then cash collaterals for the collateralized derivative transactions to be included. Then borrowing from abroad by banks in India. If you borrow from the if you do the refinancing from the Exim, NHB, and so, that is to be excluded. But if you do borrowing from in India, it is to be considered as liabilities to others, and it should be considered at the gross level, unlike liability towards the banking system in India, which are permitted to be netted off against the asset towards the banking system in India. And then adverse balance in the Nostro mirror account needs to be considered in liabilities to other. So basically, whatever comes in liabilities to other is to be included in the computation of DTN. Reconciliation of Nostro account, right? So you have the Indian currency account and the corresponding balance kept in the foreign account. Right, so whatever is the liability to maintain that money over there, it says it is to be included. Needs to be scrutinized carefully to analyze and ascertain if any inward remittances are received on behalf of customer, constituents, and have remained unaccounted, or any other debit inward entries have remained unaccounted and pertaining to any liabilities of the bank. Right, so whatever money you are yet to deposit in your Nostro account, it says even that is to be included in the liability. Right, so this is all what is to be included in the liability. How many points we have over there? 4 points over here. Right. Then while examining the computation of DTL, the auditor may specifically examine the details of the exempted categories of the following items. Right. So these are exempted categories. So again, like it's like what is excluded, not to be considered. Minimum eligible credit, right? So that is EC, and outstanding long-term bonds to finance infrastructure loans and affordable housing loan as per the RBI circular. And so what does it say? Eligible credit. Then the long-term bonds to finance what? The infrastructure loans and and the affordable housing loan. Right. So infrastructure loan and the housing loans as per the RBI circular. Right. So what does it say? Eligible credit, and also after that the long-term bonds. Why? To finance the infrastructure loans and also the affordable housing loan as per the RBI circular. It is exempted. Right, then the eligible amount of the incremental FCNR, foreign currency non-resident account, and the non-resident external accounts of maturities of 3 years and above. The auditor should verify loans out of the FCNR deposits and the interbank foreign currency deposits for reporting in Form A return. Form A is regarding the CRR and Form 8 is regarding the SLR. Okay. Right. Then banks should convert their foreign exchange assets and liabilities, including the borrowing. Right, so whatever foreign exchange assets and liabilities, including the borrowing in USD, right, then the pound, then the yen, and the euro into INR at the RBI reference rate. Right, so USD, dollar, pound, yen, and euro are to be converted at the RBI reference rate. So even the small word over there, it could be MCQ in the exam. At what rate the conversion of the foreign assets and liabilities is to be done, including borrowing? Is it as per the rate notified by the bank or the HO or by the SEBI or so? It is as per the rates notified by the RBI. Right, so it talks about dollar, pound, yen, and euro. Right, so what if it is dinar? And say if it is another currency, or other currencies, consider the New York rate for conversion into USD. Right, so for all other balancing figure, you need to consider the USD rate for conversion. Okay, right, so that is regarding what is to be exempted categories, right? So infrastructure loan, affordable housing, finance housing loan, and also the eligible amount of the incremental FCNR and the NRE deposits. Okay, right. Then as per the RBI circular on maintenance of the CRR and the SLR on the foreign currency assets and liability, right? So one more time they are talking about the foreign currency assets and liabilities, reference rates for INR USD, and the exchange rate of the other major currencies. For conversion of foreign currency assets and liabilities, reference rates from the FBIL should be taken. If reference rate is not available from the particular, wants to continue to use the New York closing rate for conversion of such currency into USD. So almost it's a repetition of the above point. And for the foreign exchange assets and liabilities, it says you need to take the RBI reference rate. For other currencies, you need to take the USD conversion rate. Okay, right. Then after that, examine whether the consolidations prepared by the bank, and so head office plus all the branches put together, include the relevant information in respect of all of the branches. Bank is having 22,000 branches. So whether all 22,000 branches ka information has been included in the consolidation. Then auditor should particularly examine whether the balance in the branch adjustment account of foreign branches have been taken into account in arriving at the net balance in the branch adjustment account. Right? So what does it say? Is foreign branches, right? The branch adjustment account. And the foreign branches have been taken into account in arriving at the net balance in the branch adjustment account. Auditor should also examine the correctness of the data in Form A for the CRR and the return in the Form 8 for the SLR purpose on a sample basis. Right? So whatever data has been given in the Form A and whatever data has been put in the Form 8, again, auditor needs to check the correctness of the data on a sample basis. Right, so auditor, you need to examine the balance of the branch adjustment account of the foreign branches. Has it been taken into consideration? Then the correctness of the data. Then, as stated in the above paragraphs, a considerable part of the information required by the SCA, the Statutory Central Auditor, for reporting on compliance with the SLR requirement will flow from the branches. Like I told you, if there are 22,000 branches, the data is going to come from all the 22,000 branches. It is suggested that the relevant information pertaining to the branches within the regions may be first consolidated at the regional level. Right, so now this 22,000, you further divide it under North, South, East, West and Central India. Right, and then 5, 5, 5, 2. And so first the consolidation directly, better than it being done at the HO level, it can first be done at the regional level. The auditor of the region should verify the same in the manner prescribed in the above paragraph and report on the same. Then the consolidation statement should be signed by the regional manager. So regional level, regional manager. The auditor at the center, now who comes into the picture is the central level. Right, so first branch level, regional level, then central level. Should apply the audit procedures listed in the above paragraph to the overall consolidation process for the bank as a whole. Where such a procedure is followed, the SCA should adequately describe the same in a certificate. That first the consolidation was done at the regional level, regional manager certified, and then the consolidation has been done at the central level. Auditors at the central level should apply the audit procedures listed above to the overall consolidation prepared for the bank as a whole. And where such procedure is followed, the auditor should adequately describe the same in his report. And so whatever consolidation procedure, audit procedures have been applied, they have to be mentioned in the report. And while reporting on compliance with the SLR requirement, the auditor should specify the number of the unaudited branches. So say out of 22,000 branches, say example 2,000 branches are unaudited. So now in his report, the auditor has to specify that 2,000 branches are unaudited and stated that he relied on the returns received from the unaudited branches in the forming of his opinion. And so he's relied on the data which has been submitted by the management regarding those unaudited branches because there is no branch auditor over there. And recently there has been an introduction of the ADF, the automated data flow for the CRR and SLR reporting, and the auditor should develop the necessary audit procedures around this. Right, so probably that will come in the further amendments over there. But yeah, right now this is the discussion that we have regarding the CRR and the SLR requirement. Okay, right, so if we come to the RBI website, you see this particular master direction, RBI, the CRR and the SLR directions 2021 and updated as on 2021, 22, 23, 24. Right, so it keeps on getting updated over there. Right, so it says the short title commencement, right? These directions can be called as the RBI, CRR and the SLR directions. Okay, right. Then Form A is regarding the, Form A return, then Form B, Form 1, Form 8 is regarding the SLR, right? And Form A is regarding the CRR, right? The cash reserve ratio. We said that auditor, you have to check the correctness of the data on a sample basis. Right? Then after that, we have the aggregate deposits, then the approved security. And then we said gold, cash, and approved securities, right? So the dated securities of the GOI, treasury bills of the GOI, state development loans, and any other instrument, right? Then for Form A, the return and its annex, bank should report the total investment in the approved security, right? Then for SLR purpose, only unencumbered portion. That means it is free of any charge. Then assets within the banking system, bank credit, right? Then primary urban cooperative bank shall include cash in hand, demand deposits, demand liabilities, right? We talked about the demand and time liabilities, right? So fortnight, and then after that, the other demand and time liabilities, right? So then they have the discussion regarding the time liabilities. Right? Then the cash reserve ratio, maintenance of the cash reserve ratio, right? Maintenance of the minimum CRR on the daily basis. Then computation of the net demand and time liabilities, right? So now they need to talk about the computation of the DTL. And then after the computation, liabilities not to be included. I think the 14 points which we saw over there, okay, what is to be excluded from the liability. And a paid up capital reserve, borrowings through instruments qualified for the tier 1 capital, any credit balance in the profit and loss account, amount of loan taken from, loan or refinance taken from. Right, so all this it says it is to be net income tax provision, amount received from the ICGC, ECGC, insurance company. Right, so it says all of these are to be excluded from the liability. Then they also talk about the exempted category. Right, so net liabilities to the banking system, right? Then the aggregate of liabilities, right? So that is the excluded, the exempted categories. Right? Then after that, the CRR computation, then the SLR. Right, so eligible assets, then the marginal standing facility, SLR assets shall be maintained by the bank as under cash, gold, or the unencumbered investments. And then for the primary district cooperative bank, then procedure for computation of the SLR, then fortnightly CRR return in Form A, Form B, and the Form I. Right, so return in Form 8, right, that is for the SLR requirement. Right, then after that, the penalties for default in the CRR maintenance, penalties for default in the SLR maintenance, right? So what is the penalty on the failure by the bank to maintain as on any day the amount of the SLR? The bank shall be liable to pay to the RBI in respect of the default, the interest as envisaged under Section 24 of the BR Act, right? And then with the issue of these directions, the following circulars stand repeat, right? So all these circulars, right? They have consolidated it over there, right? So, oh my God, there is a huge, heavily regulated industry, that is the banking industry. Like, they cannot just decide anything on their own. Like, you're selling a packet of biscuits and you're doing some type of a trading business, you can decide the rules of your business and so. But when you're a banking company, you have a banking license, right? You are under the strict vigilance of the RBI. Right, so that's the RBI circular over there talking about the CRR and the SLR requirement. So again, already the crux of the discussion over you, I'm sure you've already got it. What is very important now, like the takeaway from after what we have discussed, what further needs to be done? I want you to specifically develop a familiarity in the list of what is to be excluded from the liability, what is to be included in the computation of DTL, and also the exempted categories. Okay, right, so wonderful, right? We've completed with amendment 1, 2, 3, 4, and now also the 5th one done. And I hope that it is serving the purpose, when you are giving me your valuable time to listen to these amendments over here, right, that it is serving the purpose, right? So just wishing you all the very best. Be consistent, be on the track. That's all, right? No much heavy words of motivation I want to pour on you, but just be on the track. That's simply what I could tell you at this particular point of time, right? So looking forward to see you in the amendment number 6. Okay.